Everyone wants to ensure regular income and lead an independent life without compromising the standard of living after retirement. For this, you need a hefty retirement corpus. HDFC Life Smart Pension Plan helps you in accumulating your retirement corpus. In this video, we can figure out whether HDFC Smart Pension Plan could accumulate the required corpus that fetches regular income during your retirement period. Welcome to holisticinvestment.in. HDFC Smart Pension Plan. It is a unit-linked, non-participating individual pension plan. In this video, let us look at the features, fund options, investment strategies, advantages and disadvantages of this fund. Also, let us look at how the maturity benefit is utilized for annuity plans and what would be the potential return in such case, so that we can compare the returns with other similar investment products. First, let us look at the features of HDFC Life Smart Pension Plan. Life insurance cover to the extent of 105% of all premiums paid, including top-up premium. Through market return, it helps to build the retirement corpus. 3 fund options to choose from. Policy term, premium paying term, and vesting date can be chosen as per convenience. Loyalty additions will boost your fund value. Now let us look at the fund choices and investment strategies. First, fund choices. It offers 3 funds in which you can direct your premiums in the proportion of your choice, which may be altered later through premium redirection, or it can be altered by fund switches at the discretion of the policyholder. The 3 funds available in this plan are given in the table. Next, we shall move on to the investment strategies. Automatic asset rebalancing strategy. This strategy reduces your equity proportion as your policy nears the vesting date to ensure that any downside in the equity market later in the policy term has minimal impact on your vesting benefit. This strategy rebalances the equity and debt ratio without your manual intervention of switching the funds. The table here clearly shows that when you are nearing your vesting period, the equity allocation is reduced gradually. Next, systematic transfer strategy. It works on the principle of rupee cost averaging method to safeguard your wealth against market volatility. The premium received net of premium allocation charge shall be allocated first to the individual life preserver pension fund to purchase units. Immediately thereafter, on each subsequent monthly anniversary, it shall be switched to individual prime equity pension fund or large cap pension fund. This strategy is available only in policies with annual premium payment mode. Now let us look at the benefits under HDFC Life Smart Pension Plan. Death benefit. On the death of the life assured before the end of policy term, the nominee will receive death benefits which shall be higher of the following, that is fund value or sum assured on death. Here sum assured on death will be 105% of total premiums including top-up premiums less partial withdrawals made. Utilization of death benefit. On the death of the life assured before the vesting date, the nominee will have the following options. Either he can withdraw the entire death benefit under the policy, or he can utilize the entire death benefit of the policy or part thereof for purchasing an immediate annuity or deferred annuity at then prevailing annuity rate from the company, or purchase an annuity from other insurer at then prevailing annuity rate to the extent of 50% of the entire death benefit. Next, vesting benefit. Vesting benefit is the fund value as of the date of vesting on survival of the life assured. Utilization of vesting benefit. The policyholder will have the following option. Either he can utilize the entire vesting benefit to purchase an immediate annuity or deferred annuity, or to commute up to 60% and utilize the balance amount to purchase an immediate or deferred annuity from the company. Or else he can purchase an immediate annuity or deferred annuity from other insurer at then prevailing annuity rate to the extent of 50% of the entire vesting benefit of the policy. Next, loyalty addition. All single premium policies and other than single premium policies paying a premium of rupees 1 lakh or more in a year will be eligible for loyalty additions. They are part of the fund value and are paid as a part of vesting benefit or death benefit or surrender benefit. Here the table shows the percentage for the respective policy year. There are some other benefits offered by HDFC Life Smart Pension Plan. They are top-up premium, alter premium paying term, partial withdrawal, redirection of premium, and fund switching. Now let us shift focus on the various charges under the HDFC Life Smart Pension Plan. Premium allocation charge. You can refer the table here. It depends on the mode of payment, year of payment, and the premium amount. It ranges between 1% and 12%. Next, policy administration charge. For a single premium policy having a premium amount of more than 10 lakhs, there is no policy administration charge. For single premium policy having a premium amount of less than 10 lakhs, then it is 0.08% of single premium per month. For other than single premium policies, it is 0.1% of annualized premium per month. Next, mortality charge. It will vary based on age, gender, and sum at risk. Annual mortality charges per 1000 sum at risk are mentioned in the table. Next, fund management charge. For individual preserver pension fund, it is 1%. Individual prime equity pension fund, 1.35%. Large cap pension fund, 0.85%. And for discontinued policy fund, 0.5%. There is no partial withdrawal charge or fund switching charge or redirection charge under this plan. Discontinuance charge. This charge depends on the year of discontinuance, the premium paying term, and your premium amount. Inference from the charges. Some charges are inevitable to run the policy, like mortality charge and fund management charge. But other charges seem to be complicated, like discontinuance charge and policy administration charges. These kind of charges are not levied under other investment products in the market, thus making it uncompetitive among its rivalries. Now let us analyze the advantages and disadvantages of HDFC Life Smart Pension Plan. Advantages. The policyholder shall have the option to extend the accumulation period or deferment period within the same policy. There are 3 fund options and 2 investment strategies, and redirections are allowed during the policy term. Partial withdrawals are allowed after the completion of 5 years. There is no premium redirection charge, partial withdrawal charge, and fund switching charge. Top-up premiums are allowed. This will increase your fund value. The premium paying term can be altered before the end of the premium paying term. Disadvantages. There is no loan facility available. No riders are allowed under this policy. There is a lock-in period of 5 years for partial withdrawals or surrender. The plan levies charges which reduce your ultimate return on investment. The main drawback of this policy is that you cannot enjoy the maturity benefit fully, as there is a compulsion of buying an annuity plan. The details that we have discussed so far can give you only a basic idea about the plan. In order to decide whether this plan is worth to be placed in your retirement portfolio, we need to analyze the benefit illustration. This aid you in your decision making. Imagine that a 35-year-old male opts for a HDFC Smart Pension Plan with an annual premium of 1 lakh. A premium paying term is 15 years and the policy term is 20 years. The vesting benefit, that is at the end of 20 years, the amount can be utilized wholly to purchase an immediate annuity or deferred annuity, or to commute up to 60% and utilize the balance amount to purchase an immediate or deferred annuity. The illustration shows 2 different rates of assured future investment return, 8% per annum and 4% per annum. These assumed rates of return are not guaranteed, and they are not upper and lower limits of what you might get back. If he pays premium regularly, the vesting benefit at 4% is 24.35 lakhs and at 8% is 41.48 lakhs. You cannot encash this amount. This amount can be utilized wholly or partially to buy annuity plans at the then prevailing rates. Here it is assumed that the whole vesting benefit is utilized to buy an annuity plan. In such case, the 4% scenario, the annuity amount would be 2.27 lakhs per annum, and in the 8% scenario, the annuity amount would be 3.89 lakhs per annum. If we work out IRR for the first 20 years, that is during the accumulation phase, which is the main feature of HDFC Life Smart Pension Plan, the IRR for 4% scenario is 3.7%, and for 8% scenario it is 7.72%. But under this plan, you cannot withdraw the vesting benefit, that is the maturity benefit, fully. So this IRR is notional. You cannot enjoy the benefit or invest in any other investment of your choice. If you have any cash requirement, then this lump sum amount cannot be utilized, which is a major setback of HDFC Life Smart Pension Plan. Let us assume that the same annual premium of rupees 1 lakh as seen in the above illustration is invested in an equity or debt instrument of your choice. As HDFC Life Smart Pension Plan does not have any specific sum assured, we don't set aside any amount for life cover from this 1 lakh. In general, having an adequate life cover is advisable before investing in life goals. In the first 15 years, 1 lakh is invested either in PPF account or in a ELSS fund. In the next 5 years, the fund grows as such. At the end of 20 years, the maturity value can be utilized as per your requirement. ELSS investments are subject to capital gains tax at the time of redemption. Post-tax value is taken for IRR calculation. The tax calculation for ELSS is given here. The IRR for term insurance plus PPF combo is 7.1% and the IRR for term insurance plus ELSS combo is 11.39%, which is a post-tax return. The above calculation and comparison clearly shows that the IRR is an inflation beating one, and also you enjoy the maturity benefit fully as per your choice. Either you can invest this lump sum amount for your retirement or utilize it for other life goals. This feature is missing in HDFC Life Smart Pension Plan, which makes the investor handicapped by lack of investment opportunities. We have come to the end of this review. Final verdict on HDFC Life Smart Pension Plan. It involves regular contribution to the fund of your choice. The fund grows over time, and upon retirement, you can receive a pension or a part lump sum amount on pension, depending on your choice. Though it invests in market related product, the plan does not offer good returns in terms of annuity amount. The return and liquidity are important aspects of any investment. Here in HDFC Life Smart Pension Plan, both return and liquidity is not beneficial for an investor. The vesting benefit can either be utilized to buy an annuity or commute up to 60% and buy an annuity for the balance amount. There is also no proper life cover for this plan, only the fund value is paid as death benefit. You can invest directly in equity related products and can yield better returns than HDFC Life Pension Plan. Having an adequate life cover is also an essential aspect of financial planning. A detailed blog post about this topic is available in our website, and the link is given in the description box. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.